So what about members of the cabinet that were eager to hear Sir Philip's advice on cutting waste? Dispatches has discovered one senior minister who, like the retail tycoon, has been very generous to his wife. This is Philip Hammond. He's the nation's Transport Secretary, but is also a close political ally of the Chancellor. A rising star of the Conservative Party and one of the men who's been explaining the need for massive spending cutbacks.
And now the challenge in each and every area for every minister in this coalition is to show how we can rethink what we do, reducing expenditure, supporting economic growth, delivering on carbon...
Mr. Hammond is one of the richest men in Cabinet, with a fortune estimated at more than £7 million. His wealth will insulate him from the worst of the cuts his government is bringing in. But he's also had some help from what accountants call tax planning. Mr. Hammond made his money from Castlemead Limited, which builds luxury houses as well as care homes. Since 2003, Castlemead has paid him £3.75 million, but not in a salary where he would have to pay income tax and national insurance, but in dividends. We went to the House of Commons to see what the Transport Secretary has declared in light of the government's commitment to transparency. In spite of the scale of the dividend payments he's received, none of them are listed because under parliamentary rules such multi-million-pound payments don't count as outside earnings. And the Secretary of State stands to make a potential tax saving too. Many owners of companies choose to make such dividend payments because it saves tax. I wondered if you could explain why an individual who had a company might decide not to take any salary out of it, but take very large dividend payments.
Anybody who owns a company has the right to pay themselves a dividend out of its profits, if, of course, it has made profits. If you pay the profit of the company out as a dividend, then the national insurance bill goes away. Well, when that national insurance bill might be 20% of the total payment, you can see the attraction to paying out a dividend rather than a salary.
In 1 year alone, 2007, the Cabinet Minister paid himself a huge dividend of £1.75 million, resulting in national insurance and income tax savings that year of £130,000. However, a tax expert told us that most of these savings would be cancelled out over the following years because Mr. Hammond's company would have to pay more corporation tax. Dispatches has also found that Mr. Hammond and his family stand to make a potential tax saving in another way. Last October, he transferred 40% of his shares in Castlemead Limited to his wife.
It's just about possible that he was trying to set aside a sum of money in her hands in case there were catastrophic claims, in case he went bankrupt or something in the future. But apart from that, the only other reason I can see is to save tax.
By transferring shares to his wife, any payout she receives from the company could be taxed at a lower rate. And the fact that the Secretary of State made this transfer last October, just 6 months before the new higher rates of tax for high earners was introduced this April, made this potential tax saving even more valuable.
Assuming his wife didn't pay tax at the same rate that he did, potentially he could save a fair bit of tax on dividends being paid to his wife rather than taking them personally.
I mean, how much? Could you give me an illustration of the type of savings that could have been made?
If his wife had no other income at all, probably about £26,000 a year.
But an additional tax saving could come if Castlemead is sold for a profit. The minister's wife could be eligible for something called entrepreneur's relief, which would allow her to pay a lower rate of tax should she sell her shares in the business at a profit. A tax expert has told us that she could stand to make a tax saving of £180,000 for every £1 million of profit. Mr. Hammond's office told us that he
views any suggestion he's tried to avoid tax as malicious.
His office said,
"The tax savings he's obtained from receiving payments in dividends instead of salary are marginal."
They added that,
"The Parliamentary Commissioner for Standards has ruled that he does not have to declare his dividend payments in a register of members' interests."
and with regards to the transfer of shares to his wife,
This was not done for tax avoidance reasons, but in anticipation of entering government.